Welcome to our one-on-one on the UK Contracts for Difference, or CFD scheme. Today we'll explore how this innovative mechanism is driving the transition to a greener economy and supporting sustainable finance and economics. The CFD scheme is a cornerstone of the UK's efforts to achieve net zero greenhouse gas emissions by 2050. But what exactly is it? In simple terms, CFDs are long-term agreements between renewable energy generators and the UK government, designed to provide financial stability and encourage investment in low-carbon energy. There are a number of stages ahead of a renewable project gaining a CFD, which help to ensure best value for money and fairness. Firstly, the government holds periodic auctions called allocation rounds, where renewable energy developers submit bids to supply electricity. These bids are evaluated based on their strike price, the fixed price per megawatt hour they require to make their project viable. Successful bidders sign the CFD agreement with the Low Carbon Contracts Company, a government-owned entity, and once operational, the generator's revenues can then be adjusted to the agreed strike price. If the market price is lower than the strike price, the generator is paid the difference, and if higher, they return the surplus. This mechanism minimises risks for developers while fostering competition and innovation in the renewable energy sector. From a sustainable finance perspective, CFDs de-risk renewable energy investments. By guaranteeing revenue, they make clean energy projects more attractive to private and institutional investors, aligning financial flows with environmental goals. The CFD scheme was first introduced in the UK over 10 years ago, and since then other European countries have also followed suit, such as Greece, Hungary and Romania, just to name a few. Some countries, such as Germany and Denmark, have introduced variants of the scheme which are more tailored to the specific needs of their energy sector and investment environments. Each approach, however, highlights how these tailored financial instruments can accelerate global efforts towards a sustainable future. The global reduction in cost of some of the main renewable technologies, such as solar, onshore wind and offshore wind, has been attributed to the success of the CFD scheme and schemes like it. And to give you a bit of a tangible idea of the impact of the scheme, in just the last auction in the UK, Allocation Round 6, the UK CFD scheme awarded contracts to 128 new clean energy projects across Great Britain, delivering around 9.6 gigawatts of electricity, which is enough to power the equivalent of 11 million homes. So in summary, the UK CFD scheme exemplifies how innovative financial mechanisms can drive sustainable development. It's a powerful tool that not only addresses climate change, but also supports a robust and inclusive green economy. For more insight into some of the biggest issues in environmental policy, check out our YouTube channel. And for more content specifically around sustainable finance, keep an eye on our website throughout February for talks, podcasts and videos covering the topic area as we explore our Sustainable Finance monthly theme.